And we're
All right.
live.
Hello, everyone. Hello, Paul. Welcome to today's live stream. And it's Wednesday, so we're going to update you on a few things. And we were just chatting ahead of the stream. And I think we're going to talk about Bitcoin, of course, that's moving quite dramatically. But we need to talk about oil, natural gas, and metals. So I think we're going to focus on those three things today, those few things, and see where we are and what's going on, because there's a bit of consternation about natural gas. Too many people trying to buy the falling knife, and the same with oil, same with metals, people trying to sell the tops on these bull runs, massive bull runs on oil, on silver and gold. So we'll have a look at those. But before that, I want to just point out the news that's just come in today, and it's on your screen right now. I'll try and zoom in. And you can see that PPI, we've got two sets of news really and a couple of other things, but PPI came in really hot. Not really hot, slightly hot, just elevated a little bit, slightly above expectations. And this, of course, plays into the idea that we're going to, there's going to be increasing and ongoing pressure on the Fed to cut rates, especially as we approach the, the replacement of JP. And I think Trump's already chosen someone who's going to do his bidding by where it looks. So we probably should be prepared for a period of sustained inflation or increasing inflation, and also asset prices rising, along with things like retail sales. And that's why I brought this up now. You can see retail sales, along with inflation, PPI, which is the producer price index, the precursor to CPI. So when PPI goes up, I think I've lost my camera. Let's see what's going on. Am I still here with you?
Yeah, I can hear you, but I can't see you.
I've gone. Maybe
I'm
it's
also
coming
having
back.
problems.
Maybe not. All right, if you can still hear me, let me switch cameras and get on to, I'm having a little problem with my cameras today for some reason. I don't know why. Let me go to the MacBook camera. That should help. All right, so not the best picture anymore, but I'm still here. All right, is that all good? Can you hear me and see me properly, Paul? Yeah. All right. So just going back to those notes, you can see, as I said, PPI came in a little hot. That's the precursor to CPI. So when PPI rises, CPI is likely to rise later on in the subsequent months, a couple of months later. So this could be a slight warning sign for inflation, and also perhaps even a slight green light to the Fed to, we won't see it this month, but in coming months, to cut rates. At the same time, we saw retail sales going up. And so both quite positive for the markets, actually. So inflation ticking up, which might increase the desire to cut rates, therefore good for the markets. And retail sales, when those numbers come in strong, it's always good for the market. So generally quite good from today's news. And I think we've caught up most of the stuff that's been in backlog up until now because of the government shutdown in the US. I think by the end of this week, we'll have got through all the backlog. A little bit later on today, in about half an hour, we've got retail sales coming up. Sorry, home sales, existing home sales. And we had home starts last week, and those were quite firm. So, maybe existing home sales will be okay as well. And all this plays into the interest rates, of course. So difficult to buy a house when interest rates are high, or a car, or start a business, or do anything really. So we live on credit, of course. So that's all of that. And I've got nothing else much to say about that. And is there anything you want to add to what's going on there, Paul?
So I was just sorting the streams out. I think we're all good now.
Okay. All right.
All the back end stuff.
Okay.
No, absolutely. I mean, we're just saying before the start of the stream, it's like, there's a lot going on. There's a lot of potential things which are going to impact things regardless of whatever data points are coming out. So it is it's going to be a very interesting week, I think. And I mean, what have we got? We obviously had pretty straightforward CPI numbers yesterday, a little bit bullish for crypto, that sort of thing, for sure, right? Maybe increases the potential for interest rate cuts, but then that's all in the context of current issues potentially with the Fed and the Justice Department. And then there's obviously lots of other things going on with the Supreme Court. So all of that's got to be taken into account when looking at these data points, making it very challenging. I mean, what's your advice to people? How do you, with your experience with a lot of world events?
Yeah, so this is really all about, so my belief is that 2026, this year, is going to see a lot of volatility, particularly towards the end of the year. So because of all of this stuff that's going on, complicated stuff, politics and Fed stuff, and of course this idea that we're in an asset bubble that might burst any time now, all the all the numbers on stock, most of the stock prices, particularly the AI stocks, all a little bit overextended. And so, yeah, so there's all of that. But I do think that basically we've got a lot of tailwind behind us in the market. And I think we're going to see a strong year across all of the asset classes, probably most of the commodities too. But it's going to be probably characterized by severe rallies and massive dips and massive whipsaw on a large scale. So we just got to be nimble, ready to hedge or stop out bad trades. When I say bad, I mean not winning trades, not bad, just trades that don't go your way. Be prepared to get out of them quickly. And as I said to everyone in the private group this morning, be quick to hedge or stop your trade out, depending on how you manage risk, and be slow to re-enter or to unhedge, depending on how you manage risk. And so what a lot of people do is they wait until the very last possible minute when their account's groaning at the seams before they hedge or take a loss on the position and put themselves in a very precarious position. So I think this year, 2026, is going to be characterized by a lot of that sort of stuff. People not knowing where the bottoms are, exceeding levels, swinging through support and resistance levels, and generally a whipsaw type trade in general. But I think it's going to be a bid, B-I-D. I think it's going to be up. I think we're moving up. So, but it's not going to be easy. And we've seen that on some of the assets already, going into exponential moves like silver, gold, Bitcoin. Yesterday's move was pretty exponential. And we've seen it on the reverse side recently on natural gas. So I want to talk about a few of those things. But I think it's going to be a difficult year, Paul. And it might also be a year characterized by breaking of cycles and patterns, particularly in the crypto world. And it's going to be fascinating, actually. Is the 4-year cycle dead, or is it not? I suspect it might be. And if it is, and we see a big rally in 2026, and if 2025 was actually the bear year, depending on how you measure it and what scales you use, then that could throw a big cat amongst the pigeons in the crypto world too. Even though a good cat, a nice cat, but a big one.
I think the interesting thing is that like people have to look at the current market conditions and potentially what we've got coming this year, and you have to alter your approach and your strategy. And what I've been preaching over the last few months in group is, don't be like, oh, it's going to retrace to the 318 or whatever it is. I can't remember. It's not the 382 or whatever. It's not going to do. You have to. It's like there's a time and a place for jumping out on a ledge a little bit overextended, right? There's a time and a place for that, because you have to trade in a bull market. You have to trade continuation patterns. You have to get used to that, right? But this is not what we're in. We need to be looking at all assets in terms of our entries being the most important measure of risk management, and therefore looking for the point of invalidation, whether it's natural gas, whether it's Bitcoin or Dogecoin or whatever, looking for the point where it flips from bullish to bearish. There's your entrance point. Because if in volatile markets, you have to be looking for that, the ability to switch on a dime and have manageable control over it. And if you're kind of thinking, oh, it's going to continue up from here, I'm going to enter ZEC, even though it's 1,000% up, that's a lot of room to fall down. So I think you have to adjust your strategy. And one of the things we do in the group, of course, is guide people about the mode they should be in at any given time, given the market conditions. So exciting times, but people do have to adjust the strategy for sure.
Yeah. And that means reducing size. It means getting out of trades more rapidly if you're not sure about the direction. And perhaps just being a little bit more nimble and flexible in general. We tend to get very stuck and tied down as traders. Once we find something, we get into a flow. And it's nice to be in the flow. We talk about being in the flow. That's nice. But sometimes we get stuck in the flow and we don't adapt rapidly enough. Now, I want to talk about natural gas, because this is a good sort of segue into the flow.
Drama.
And just interrupt me. I'm not looking at the camera now, so I can't see if it's going to go off again. Just let me know if it does. So the flow of natural gas is obviously downwards, and we're at the bottom of we're below the bottom of the previous contract. If we look to the left-hand side, this red arrow or bar facing upwards was the entry into the previous contract, and we rolled into it, gapped higher, and then we gapped lower out of that contract again, and we're right back where we started. In fact, we're below where we got into that previous contract at about $3.50. We're now trading at 316, having dropped down. Now, let me tell you how we played this, because it's really important. So I know quite a lot of folks in the private group have got themselves into trouble on this natural gas trade. The first thing I want to point out, first of all, before I look at the actual plays that I made, is to look at what the big picture looks like. And I'm going to go to the day chart. This is the 4 hour. And you can see, yes, we're a bit oversold. You can see it's kind of messy down here with what looked like a flat bottom reversal piercing pattern type candle with equal lows and closing more than halfway up the previous body of the previous candle. That's pretty bullish, very bullish. And the next candle moved up, but only to the 100-period moving average here on this day chart. And I hedged my long position. So I'd taken a long from the bottom. We'd taken a longs from over there, which are still open. And when we got to that top there, I took my profit off and I hedged this position. I've now locked in. I'm basically break even because we took profit at the bottom too. So even though this trade has moved against me, even though I'm hedged with a loss locked in, very small one, it's a small 25% position, and I have a 10-cent hedge. It's very, very small. But even that has been covered by the fairly frequent profits that I've taken during the hedging and unhedging process. So that's all very well. It's very nice for you to, for me to tell you. I think my camera's gone off again.
Yeah, your camera's
gone off.
Can you
hear me, Paul?
Yeah, I can hear you, but just can't see you.
All right. Let me just get back to. Doesn't really make a big difference, does it? But let me just switch cameras somewhere. Give me 1 second. All right, I got the MacBook camera. Not as good, and you're looking at my nostrils, but that's okay. They're quite clean. I had a bath a while back. So, so getting back to natural gas. So yeah, so it's moved down. And for those of you who have been just getting torn up on this trade, it's clearly moving down. And I know that, let's go back to the 4 hour chart. And I know that when we moved up and I took profit over there at the 50-period moving average on the 4 hour chart, many of you did not. And you held on to those trades. So we got long there. I got short hedge, took profit on the short hedge at the bottom, got long, and I took profit on the long and re-hedged it back at the top here at the 50-period moving average. Notice that we have not regained the 50, and we've quite beautifully really moved down below it, candle after candle. This is a 4 hour chart. So a couple of days really. And we've now in this last 4 hour candle collapsed down completely. It's very bearish. This candle is not closed yet. We'll close in 13, 14, 15, 16, 17, 18 in two couple of hours time. And we'll see how this closes. If it bounces out of here, we may have a chance to get long if we get a reversal pattern. Doesn't look like that's going to happen. It's a very bearish, strong, almost a price magnet candle. The price magnet for this move, and the price magnet is a level on the chart, which kind of everyone has spotted, and the price will move towards it rapidly and very often reverse and just bounce straight away out of there, like a liquidity grab or an attraction zone. Now, what we have done here is reach the bottom of this very interesting channel. And it's a channel that you will not see on many charts because it's my own channel. I'm going to go back to the day chart. And the channel actually originates from a long time ago in 2023. If you remember, we were trading this channel, buying the bottoms every time until it fell through. That channel there, I've just sort of copied, duplicated a parallel copy of it and stuck it underneath the current price action. There's no reason for it to be there apart from sort of I refer to it as a distant memory from 2 years ago. But it's super interesting. Notice how we've traded up perfectly along the top of it. We fell down into it, bounced off the bottom 3 times, and we're right back at that bottom again now. It's a very, very important level, not because of any other thing than it's somehow the market has a memory of this gradient and this channel size. And there is still a chance that we could bounce out of here. Don't hang your hat on that hope, though, because going back to the 4 hour chart, it's moving down back into my blob. It is my buying area, but I don't like the way this is moving down so aggressively. So I'm going to be waiting now. I've hedged. I've got a very small loss locked in, which has already been covered by the profits that I've taken through this process. And now I need to decide what happens next. And the best way to do that is not to try and pick a level, pick a bottom, or pick a weather forecast to go with, or to pick something that someone said on X. It's much better to watch this chart and to see what happens next and actually just wait for it to actually occur before you react. So I'm very sorry for those of you who have lost a lot of money trading natural gas, and I'm very sorry to have to say this several times a year when this sort of thing happens. Natural gas is a ranged instrument, and it's not one of those things where you buy and hold and hope for this to move higher and higher and higher into the future. It's a commodity which trades between a higher level and a lower level in that range, year after year, decade after decade. Those levels might change slightly. And as I've said to you before, I think we've moved into a slightly higher range between roughly $3 and $5. We were between $2 and $4 for the last few years. Given the higher range, and I think that's brought on by demand, pure demand, for a whole host of things, natural gas will fill in that demand requirement. And we'll probably see this trading within a higher range. So it could be that we've found a bottom here. It's not happened yet. It might be that this is the area that everyone's looking at. It might be that a miracle happens, but I don't think it's going to. And I think we may get down below $3. It's not just this reason of the fact that we've approached this price magnet with such vigor. We've still got a shaven candle. It's still moving lower. In the last hour, we've moved down by 5 more cents. 5 cents on natural gas is a long way. This is a massive candle, and it's not looking like it's going to turn around. So the play is here just to wait and see. The other problem that we have is that the COT report, the Commitment of Traders, indicates that there is no one getting long on natural gas. Granted, there are a few long positions here and there, but traders, players, big players, whales if you want, are adding on short positions faster than they're adding on long positions. There's no short squeeze. There's no change in plan. Everyone is just still short on natural gas, still weighted short, even though there are some longs floating around. So it doesn't look good, folks. And the next stop is probably $3. And, you know, the way this looks, I wouldn't be surprised if we move down below $3. There's a blue line underneath this chart that you can see. Let's go back to the day chart. That's coming up underneath as well. It's a trend line. It's only touched twice, so it's not all that relevant yet. But maybe we'll get the third touch into that order block just below $3, and that's at about 285. Another very key level on this chart. You can see I've already got a green line drawn across there because that's a line that we've traded off before and that I'm observing. And so we're back, potentially approaching back down into that order block just below $3 at the blue trend line, and a sensible area to break out. We've held this level. We rejected it there, and then held it once, twice, 3 times, sort of 4 times, 5 times. We're coming back there now. The fact that we've held it 5 times is also not good, by the way, because 5 times, it's a bit too many.
Once you spot a pattern. What are your thoughts about 2.6?
Yeah, 2.6 is quite possible, for sure. Yeah. And I think there's actually a rollover gap down there as well that someone pointed out in the private group. So 2.6 is all the way back down at the bottom of this Fibonacci study and at the last significant swing low, 2.64-ish. 2.62. So yeah, we could reach there. But, if we only get to the 78.6% fib, which is where we are now, we won't have to do the full retrace. So we're trading in and around the 786. Yeah, that is the 786. So a full retrace would take us down to 2.6. So yeah, if we don't hold here right now, I think we're going to have to get down to the bottom unless we bounce off the blue line. But no matter which way you look at this and no matter how you cut it, you cannot put lipstick on the nat gas pig. It's a pig right now and it's moving down, and I wouldn't be buying this at the moment until we see clear evidence. Now, evidence looks like a reversal candle on the 4-hour chart, and we'd be looking for an engulfing candle, piercing pattern, similar to dark cloud cover the other way around, or a 1 up, 1 down, something like that. There may be other aspects that you look at for your own reversals. You might look at, for example, a 513 EMA cross on a 1-hour chart or a 15-minute chart. Or you might look at the MACD or RSI or stochastic turning back in your favor. Whatever you choose to use. I only use candles. I don't use oscillators. So that's natural gas, folks. I'm sure there will be some questions. So
it's about, isn't it? It's about what type of trader are you? Are you the trader who starts to react on the first couple of signals, which might be just a candle break, right? Or do you require some golden crosses? Do you require something like that first? Are you, what trader are you? And then decide what you are, and then wait for those amount of signals and then trade it, right? I mean, that's the way to do it. Somebody's always got to be forming that double bottom. Somebody's always got to be trying to catch that knife in order for it to stop. But if you don't want to be that, make a decision about what signals you need and then enter based on that. And if there's a massive amount of fear, maybe you need a few additional signals than you might normally do to offset that. But that's the game, isn't it, ultimately?
Yeah, no, absolutely. So that's natural gas, folks. And then I want to just, someone was mentioning MSTR. Let's just quickly have a look at stocks while we're here. So, stock markets are moving down. NASDAQ, S&P, the market's just opened 17 minutes ago. So you can see we're getting a bit of a sell-off on the NASDAQ, the S&P. German 30, I've taken profit on right at the top there this morning, very early this morning. So we're out of that one, having grabbed a really good profit, about 700 points, I think, on that one, from 24.7 up to about 28. Actually, more than 700 points, maybe 800. So a really good trade, but we're out of that one. These are moving down slightly. There was a point about MSTR. Someone's just said they've taken profit on MSTR, one that I'm long on, and actually one of my favorites. And if Bitcoin keeps going up like it looks like it will, in fact, it is. It's just surging up. I'm just looking at my big charts across to the other side. Massive rally, massive, moving all the way up to over 96.3. So MSTR moving along with it, breaking up through the 50-day here on this day chart, looking good. I wouldn't be taking profit on MSTR. Yes, we've got a gap below us, which may need to be revisited at some point, but this looks like an impulse move after breaking out of the purple line resistance. So that's MSTR. I want to come back to energies very quickly and oil. Now, there's a lot of talk about oil, Venezuela and Iran. It's all about oil these days, isn't it? And
can I just say about oil? Can I just say about that? Because we put ourselves as like about insider information and so forth, but exactly what we were discussing last week about Venezuela being almost uninvestable, right? Very challenging conditions. That's exactly what the oil executives said after their White House meeting this week, right? So it's very interesting that there's that disconnect between the industry and what I suppose we're saying is just common sense, just looking a little bit into Venezuela and knowing a little bit about it, and then saying, yeah, that's going to be a tough sell. And then the executives saying the same thing. So, you heard it here first, folks.
Yeah, that's it. So, so oil, I think oil, I've just generally, I probably got into a fixed mindset on oil and a little bit obsessed with the short side, but I have been selling it for 3 years and we've won every single trade for 3 years without fail. So 100% win rate. And I'm short again. These have all been shorts, every single one of them. And I'm short again. I've got 3 positions. Those 2 are already closed. So these ones here. Now, the last position I took, let's talk about the last 2 positions, one under the trend line and the 100 period right here. This is the day chart on WTI crude. And then today's trade at the 200 period moving average and this breakout line. It's a very important level because it's not only a support and resistance line, it's where the 200 period moving average is. It's the point of control. It's a big blobby point of control here on the chart, but nevertheless, that's what it is. And we've moved up to that level. And I think that in line with my strategy on oil, this should move down. I'm not saying this won't spike up into one of these 2 order blocks. Could well do. And if there's further tension or I don't know what the word is. I think tension is the correct word, actually.
Is it an understatement?
The tension's there already. I don't think you can get much more. But so so oil could move one way or the other, but I think generally it's down unless something weird happens, and anything weird could happen at any time. So keep an eye on it. But I've sold a little bit more now. We've only got a 40% position on this too, so it's not massive. And natural gas is only 25%. So we've got space to add. I don't really want to be holding this if it moves much higher, particularly if it goes above the order block. And that's at around $65. And I think 65 at the worst should cap any further rallies. Let's hope it holds here at 61.5. So we got short this morning at 61.5. And then I'm going to talk about metals. Now, I've just taken profit on, or hedged rather, it's the same thing in my case, on all of my silver trades. We've been long on silver, believe it or not, since beginning of last year, around about April, in fact, further back than that. I think in fact, right at the beginning of last year, we got long in at around $30, low 30s, high 20s. And we've been long ever since, occasionally taking profit, but mostly getting straight back in as we've been long on this, but as a hedge against our short gold position. Gold has barely moved up in comparison to silver. Silver has, since, let's say, this last long position at $48, I'll put a marker on here for you and show you the difference between gold and silver, because people are saying, well, how can you be short on gold? You must be wrecked by now. Let's look how much they've moved. Remembering I've been long on silver since $20. We're at now 91. So that's like 4x, right, on silver. Whereas gold has moved up, and even from this level, we've moved up from 48 to 91. So that's double just from a couple of months ago, from November last year. Whereas gold has barely moved. I mean, gold has moved, don't make no mistake about it, but it's not exponential, and it's moving up in a very orderly sort of channel. And we've been able to get short on gold, nibbling on occasion, first of all there at the channel center line, and then after the big sell-off over here, it looked like it was going to carry on moving down, but it didn't. It bounced out, and we got short near this very skinny channel top again. It's barely moved up. Since November, remember, silver has since the beginning of last year, silver has 4x'd, whereas gold, since the beginning of last year, has moved up from 3.3 to 4.6. So about a 50%, 40% rally on gold. Fantastic. Very, very good rally. But silver has moved up by 200% or more in the same period. And so because of that, we've been long on silver, short on gold, and we've taken tremendous profits on silver. And we're carrying a much, much smaller loss on this gold short position, which I will hedge if we have to. And if we break out through the top of this channel, I will hedge this and no harm done. At some point, it will turn down. And just looking at this a little bit more closely, at gold, what's it doing here right now, this moment on the day chart? We have a potential triple tweezer top. And looking at the 4-hour chart, you can see this sort of topping process. Yes, it's quite supported. We've got this blue line, the 20-period moving average. But if we should break down there at any point, it should trigger an avalanche of sell orders and drive gold down probably to at least its 20-day moving average or the channel bottom. It's not a long way down, but it's something, and it will alleviate our entire position, give me the chance to get out at break-even or for a small profit, and then to re-evaluate. I do think that gold and silver should move down, although, as I said to you in my live stream on Sunday, silver has the chance of moving higher up to $102. We're currently trading at 92, and that's the next fib extension level. I'll show you on the week. There it is on the day chart, and there it is there. The 4.236 Fibonacci extension is at $102. We're trading at 92-ish now, and we've got this exponential move, which could take it with momentum straight up to $100 plus. And in fact, there are further levels even higher up, which I haven't got on.
Can I ask you a big picture, because I'm looking at the chart. I've just brought up the chart on my side, and I've just looked at the exponential gains, which is essentially what looks like a blast off from about $25, $26. I'm just looking at some of the previous patterns where, this is going back to like 1980, right? And then we had a huge move in 1980. Then there was a 2011, 2008 sort of kind of pump. And now here we are again. And each time we've seen that, they pretty much reset to the takeoff point, right? So as an example, let's say November 2008, silver went from 10 to 49. And then the next blasting off point was essentially 10 for this rally, right? So are we going to see silver potentially coming all the way back down to 26? I mean, what's your thoughts on that big picture sort of thing?
Yeah, so I think we could, that would be about a 50% retracement, I suppose. But sure, if we just do the bare minimum and come down from one of these fib extension levels, starting with the one that we're at now, I'm not short. I have a short position on, but I've also got a long position still on, so I'm fully hedged. but I do have a short position and a long. That's why I love hedging, Paul, because like on gold or anything that you choose, it doesn't matter. Once you're hedged, it doesn't really matter which way it moves, because you're making a profit on one side of the hedge, whichever way it moves. And you can always sort out the other side of the hedge later on. And you're always in the money at some point. That's what I like about it. It gives you flexibility. And so, so I'm not short, but I have a short position offsetting my long position. And I think a natural thing would simply be a mean retracement. I'm not a big mean retracement proponent. I don't think it makes, often the mean will catch up with the price rather than the other way around. But I think if we do just get a mean retracement back to the 200 period moving average on this day chart, very, very simple. The 200's way down here at about $44. We're trading at $80, $90, 92.
50
so this will move up. This will move up, Paul, up to that zone there, right, where those arrows are over the next few weeks. That's kind of what I'm thinking. And then maybe we'll try along from there too. But yeah, I think like gold and silver always do reset, like you pointed out, and we'll enter a period of stagnation for 3 to 6 months, maybe even 12 months, pretty much like we saw on Bitcoin this year. And we could go sideways to lower for 3, 6, or 12 months.
Yeah,
and even longer before this actually starts a new bull run, if it's going to do that. I mean, I've got 3 trend lines to work with.
It's very interesting price action with silver, and what I suppose I'm getting at is, of course, you're an experienced trader and your risk management, hedging, and so forth is watertight, and that's great. But for everyone else who's probably a little bit more casual, what do I tell people in crypto, right? and silver obviously is behaving. It's moving very quickly upwards, right? Which is knocking door on my kind of territory. It's like the second you want to start telling your friends about it, right? Look at where silver is the second you want to start selling it, right? And seeing as the media is all about silver right now, look at silver, right? To me, that's a sell signal. I mean, what's your thoughts on that? No TA, just like.
Yeah. No, you're right. I live in a block of flats. I don't own my flat. I rent it. I don't own any property here. For various reasons, but so I rent a flat, and the guy who rents the flat next door to me, believe it or not, works at the municipal dump. And you think, well, how can he afford a flat on the beach if he works at the municipal dump? Well, I tell you what, you can make quite a lot of money by working at the municipal dump, but that's another whole story. The things people throw away, you cannot believe. But he spoke to me yesterday and he said, have you bought silver? Or it's something like, are you going to be buying silver? Because he knows I'm a trader. And I said, no, probably going to be selling it, if anything. And he said, oh, all right. Well, that's not what everyone else is telling me. He's just reached
his ears. The birdie's just sat on his shoulder, but it's too late, right? He's missed it, right?
Yeah, exactly.
That's the whole thing, isn't it?
Yeah.
Poor
so my advice on silver is, like, I've hedged. That means I don't think I think it's going to be more difficult to keep going up. That's why I've hedged it, but I haven't got short. So I'm not saying it's going down. I'm saying it may struggle to move up at the same rate, or if at all. And the same on gold. Although I'm short on gold, I'm not hedged. It's not a big position compared to, what I haven't loaded the boat. But I think this might move down. But once again, if we move up through this level, and I said to you, it's a potential triple tweezer top here on gold, going back to the day chart. Okay, it's a bit messy, but those 3 candles there, potentially this could move down. But once again, if you're going to be selling this, have a risk management plan in place, and don't just willy-nilly sell it. I saw some people again in the private groups selling silver and buying natural gas, and then forced to hedge on occasion, and then unhedging almost immediately and getting back into the same situation again. In other words, long on or short on silver, and it's moving up. So just be very careful. I'm not saying you shouldn't short these or that they're not going to move down. I think they probably will, or might rather. I think it's a better term, but I don't know what time, and I'm not going to go all in on the short side. That's all I'm saying. We've talked about stocks a little bit, just to say I'm long. I've got some new long names on. I'm very bullish on stocks, particularly names like, not so much the NASDAQ. I've actually lightened, as I said, my German 30 size. Still got some position on NASDAQ S&P. I don't like the way it's moving down. but I've also got positions on MSTR, Tesla, Coinbase, Nvidia. A lot of these are crypto plays, and then I've added some more on as well. Yesterday, I took one more play. I took a long on Avgo, and we're also long on Circle. So I'm moving into some more of the stock names as we move forward into this year. I think they're going to be fantastic opportunities to buy some of these tech, AI related and Bitcoin related names. So I'm starting to sniff around at these, starting with Avgo and Circle on this page, and then all these names at the bottom: MSTR, Tesla, Coinbase, Nvidia. And I think I've really covered it. I haven't spoken about Bitcoin because I'm going to allow you to do that, Paul, because as we are talking, it's moving up and has broken through what looks like the channel center line of this potential bear flag. It's still a potential bear flag. Are you going with that same story, Paul?
Yeah. I mean, and look, okay,
yeah.
so
I'll let you take over from here with the crypto. Paul is our crypto expert. I've done my bit, so let's hear from you, Paul.
Yeah, sure. Well, I'm going to obviously we're going to have a proper live stream crypto tomorrow. We'll get into that. But if you want to know what's going on with Bitcoin, check out Bitcoin update firstly from yesterday, as I really get into the important lines in the sand to watch and how that we do have a bearish bias at the moment, but we do talk about what's going on. So check that out. It's a nice 8 minutes, really inform you. But just to give you a quick summary of what's going on with Bitcoin. So big picture, 101K is the weekly 50 MA, which is the first serious bearish signal we got. So on a higher time frame, 101K is very significant, right? And we have to presume that we're going to get a strong rejection from that level on higher time frames when we reach that. But so far, we had a breakout finally of our trading range from December. And we came back down to our ideal retracement zone, which I think we can say now we nailed, right? We were telling a lot of people in the group to wait, right? 89 to 90K. We've got that. We've now broken above the local resistance in the last 24 hours, which we haven't been above since November. And then we ran into essentially minor resistance just based on this little zone here at around 96.5K. And I didn't think it was going to be too difficult for Bitcoin. But what I was saying earlier is that if Bitcoin could not get above 96.5K, which is this line which we're just breaking above now, then we still need to consider this line here, which is essentially 92.5, as potentially local support. You'll notice I haven't changed this to local support now because I need to see a bigger move and I give a little bit of air behind the price action in order to say that, yes, this is the best place to come in on, because we are still overextended. And you'll note that if you look at this in terms of just basic retracement values, this still makes sense. So this is no longer local support, you could argue. You could probably say maybe this is going to be local support, but we're in the middle of a move, right? So unless we see a stronger move up from here, presume we're going to lose local resistance again in the short term and come back down here, and maybe 92.5K is where you might want to take a front-running entrance if you've missed it. I'm not sure we're going to come all the way back down here, but if you do see a stronger move up to here, then you can start talking about coming in for the flip of local resistance at 94.5K to supports. But right now, I'm not going to tell people to all right, we've broken above local resistance, therefore the textbook play is to come in on the retest. No, we're a little bit overextended, and we're probably going to get a rejection from here and come back down before another move up. But that's the way I would play it, right? And we've been talking about this earlier at the start. You know, our ideal retracement zone is based on probabilities. But of course, if Bitcoin breaks above local resistance, this no longer becomes our ideal retracement zone, as it's likely buyers are going to be looking up at higher price points. And we have to adjust based on that. But there is a system behind it, right? So as I said, if we don't manage to properly break above this level here, expect it's coming back down below local resistance, right? But if we do move all the way up here, then this level, this higher level at 94.5K, flipping local resistance to local support seems more palatable. And as traders, we've got to be adaptive like that. We've got to see if this happens, this is probably the best place to come in. If this doesn't happen, this remains the best place to come in. So we're doing okay. This is pretty good. And if anyone entered in our ideal retracement zone, then this is a good place. But as I said, the last few weeks, I will be taking profits from my position I've got here at 101K. And I want to see how the price action interacts with that level going forward, because on higher time frames, there's a 15-minute chart, so you can just see what's happening. On higher time frames, 101K up here is very significant. But that's essentially Bitcoin. I mean, what's your perspective on this at the moment, James?
Yeah, so I'm in at around 91. My average price is about 91,000. I'm wondering along with many others, and I'm glad you mentioned it, where to take profit or hedge in my case. And 101 looks okay. I think probably that's a little ambitious for me. I might start to take a little size off at around 98 and then and see what happens at around 100 and then take a little bit, so do it more gradually. But yeah, I think that looks good. And the other thing is like, maybe you can just touch on this as well. What a lot of traders do is and it's not getting out of trades is the most difficult part of trading, either getting out of a winning trade or a losing trade. Most people know the pain of getting out of a losing trade. You've got to lose money or hedge your trade. But getting out of a winning trade is equally more as difficult. And a lot of traders tend to delay that process as well. Yes. Because of FOMO. Yes. Maybe you could advise on that. Is it easy to get out of a trade on Bitcoin and then get back into it later on, assuming you haven't been locked out by a $10,000 move whilst you were out of the market?
Yeah, if you're following a system like we just talked about, and this is the thing. So obviously you can see on this chart that this is kind of the bullish trading range we're in when we put on all night new highs. So you could say that Bitcoin breaking above this triangle pattern means we're coming up a bit higher to maybe 108. But because the weekly 50, and there's not much going on in this area between 101k and 90 and current local, what maybe local support soon, right? So it's a bit of a low volume space here at the moment, right? Recently because of this markdown, but because the 50 is so significant, right? That's why 101k to me, right, is the level to take profits and then see what happens, because I've got one eye on the higher time frames and the big picture, which everyone should do. But there's no issue. Firstly, you never lose taking profits, and people need to drink that, right, and just swivel it around a little bit. It's like you never lose if you take profits. Okay, that's the most important thing. Now, you can see Bitcoin coming up here. I will look to take profits 101k, knowing that if bullish momentum continues, we could see a further move up, right? But the higher we get above 50 MA, the probabilities of it reversing increase. And I don't want any part of that. Now, you could then see a rejection, right? And you could say to yourself, okay, I'm going to exit my positions here. But if I see then Bitcoin ascend back into this upper range, maybe barrel through a couple of levels, then I can look at coming in on the flip side of the 50 MA, 101k, as a plan to re-enter, right? So, but I'm not going to presume that's going to happen because this is a significant bearish signal, a moving average we've lost, and there's no presumption we're going to go above it. So that's how I would approach it. And I would always say, like, okay, so if you see Bitcoin just put its head above the 50, that's not enough for me to then re-enter the position I've just exited on the flip side. But if I see this, then yeah, that makes sense, right? There's a bullish narrative there to come back in. So I'm not just saying, well, you can sell your position here, and then if it heads above it, then you can re-enter again. You can, but the conditions have to be right, because as I've said over the last few months, in order for Bitcoin to offset all of these bearish signals which we're getting on higher time frames, it's got to do something significantly impressive. As an example, if it does this, puts in new all-time highs, that would be enough of a signal for me to look to re-enter Bitcoin again on the flip side of the 50 MA, right? But that's what I need to see in order to do that, because I'm going to presume there's more downside. And that's the way you guys should play it, because this is the move, essentially. The move is either from 89 to 90K to local resistance, which we're now going above, a short-term play, or entering on the 89K, 90K, our ideal retracement zone, and selling at 101K, right? That's the only play right now. Those are the only probable moves from Bitcoin, and there's no guarantee we're going to head up from there, right? And that's why you take profits, and then you wait and see. I mean, that's the way I would do it, right? But it's not sexy, right? It's regimented. It's check box. But that's how I would do it.
Excellent.
Yeah. But
so we're long on. I'm long on Bitcoin from 91. You're long. Many of the folks in our private group are long too, and we'll be watching around about the $100,000 level to see what happens next. It is a good idea. Yes. There's a question about. I don't know if I can override about SMH. Can we quickly switch across there, because I want to talk about SMH and TSM too. Is it TSM? Taiwan Semiconductors. Oh, there we go. That was easy. How did you do that so quickly? All right.
I move
I
my
was
mouse.
trying to do it, and I've got to do about 4 different things to get that to happen. This is SMH, all right. Another semiconductor company, Van Eck. Basically, I think all of these are going to be good buys, good opportunities. And we'll have a look at Taiwan semiconductors too, and all of the semiconductor stocks, including AMD. What's it? I've forgotten it now. Nvidia, AMD, Intel. All of these sorts of names, SMH, all look quite good for the future. But I think we may have to pull back a little bit. Now, we've broken out of this double flat top, which is great. We may need to just pull back to that and bounce off. The 20 period's catching up, the green one. So that could be a good zone. We've got a little gap down below there, which might need to be filled. Probably need to fill that gap, get slightly lower. There's a gap to the left there too. And I think we could actually reach the channel bottom rather than just the black line. So a little bit further down. And what I do think here as well is that because we're diddling in the middle of the channel center, channel center line. I haven't drawn a proper channel, but the channel center line is basically where we are here. And so we probably reject off there, come back down to the channel bottom, something like that, and fill in a couple of these gaps. So that's SMH. And if you look at the Taiwan semiconductors too, over here, I've got them on this page. There we are, TSM. You can see a similar sort of thing. Also broken out, or draw a horizontal line. It's another name that I'd like to get long on, but not now. Sort of a flat top breakout from a triple top with a gap. It's interesting how we gapped through the line. It often happens. We talked about this before, Paul, when products gap through a level that they find difficult to get through generally. It's tough to get through that triple top. So let's just gap through it, pretend it's not there, or deal with it brutally. So that's what happened. So once again, the 20 period's actually where the gap is, but it's also in line with that breakout level. So both of these, but I think they'll probably come back a little bit deeper. It's not going to bounce off the flat top beautifully. That it never does these days. Markets tend to mess around a lot more than they used to 30 years ago. And so what I think is we'll probably come a little deeper and maybe even further than that. There's another little gap there, by the way. So something a bit deeper down there and then out for TSM. And I think the same thing, if you're going to be trading any of the chip names, they probably all need a bit of a pullback, including NVIDIA. You can see NVIDIA is already on its way down. And I'm going to look at AMD as well during this year for opportunities. If NVIDIA gets over, everyone's sort of, it's overcooked, overdone, there are plenty of other chip names that might follow suit, that might catch up and catch up with the rest. Just like Bitcoin is about to catch up with the stock markets and gold, right, Paul?
Yeah.
This year.
Yeah. Well, I mean, it's certainly trying to. I mean, when people say like Bitcoin's like pumping and going, I'm like, no, it's not. It's like that's nothing. It's Bitcoin just like piddling a little bit, and it's quite funny because you think the things have changed a lot. And when Bitcoin's been so still, right, for like a month, any movement is like, yes!
Yeah.
Right? But it's really when Bitcoin goes, it, right? It's just going. And we haven't seen that for a while. And maybe we will, right?
Maybe it's just starting off. And catching up, And that's all I've got, Paul. I don't know if you have anything else you want to talk about in the altcoin space, or if you want to carry on with that in your videos later on this week.
Yeah, lots of things. We've got lots of things to talk about with Ethereum tomorrow. So please join me for the crypto stream where we'll cover some setups and the general state of things as before. And also just a notice to our members, our valued supporters and our fans. Just want to remind you that if you are a supporter, we have just lowered the price of our fan tier, which is the more premium access to YouTube with exclusive content and so forth. We've just lowered that. Now, if you're thinking about upgrading, then now's a good opportunity. And if you do upgrade, it will be called the new fan tier compared to the old one. It's just a little bit cheaper. But if you are one of our valued fans, then just be mindful that when your subscription is up just switch over to the new version of the tier, and it'll just save you a little bit of money, as we've just done a little bit of tweaking to the price. So that's just something we're doing at the moment, just for a bit of housekeeping. And you, James, are going to have a tech video out tomorrow, is that right? To keep everybody engaged. We've got a tech video from you tomorrow. We'll have a live stream with me as well later in the day, and then we're back with altcoin gems with a few altcoin setups for you to trade. So yeah, full slate this week, but interesting times. And again, the Supreme Court ruling on tariffs could, under the radar, be quite impactful. So just be mindful, traders at the moment. If not today,
and the China tariffs, the Iran oil tariffs.
Well, yeah, I mean, and in that context, it could be a bit of a mess. It could be a bit of a mess. So, well, I mean, if we're using it as like an important leverage, right, in an important situation, and then the Supreme Court strikes everything down, there's going to be fireworks. But we don't know exactly when that ruling is going to come. It could be today. It could be Friday, probably. Less probable next week, but it's something to look out for, and maybe treat this week a little bit like an FOMC or a data point week as well. Just be a little bit cautious, smaller positions, because there could be some volatility around the corner. So yeah, but that's all I'll say for that. But yeah, doing all good. Thanks for having me, James. Good session today. And we'll keep everyone updated.
Thank you. And thanks for everyone who was here. It's wonderful. And we'll see you, for the members, we'll see you back in the live group shortly. I'll be right back. And a couple of trades I'm looking at right this minute, so I'll update you when we get there. So thanks for everyone being here. Thank you, Paul. And I think it's going to be an exciting year, actually. I'm really looking forward to it. But I do hope that all the fighting stops. I hate war and fighting, and it makes me very depressed. So let's hope it all comes to an end, or most of it, and we can get on with life as normal in many parts of the world. So
yeah.
I hope so. I hope for that. Yeah. So
yeah, me too. Very much.
All right, folks. Paul,
thanks for having me. Take care, everyone.
All right. Take care. See ya.